Welcome everybody to this special video. Today we're looking at developing trading reliability. Not exactly a topic on the tip of everybody's tongue, but nevertheless, as I hope we'll demonstrate today, vitally important that you address this on a constant basis in your trading. So let's get straight into it and start by talking a little bit about measurement terminology. Now, there are two key metrics that we look at when we're looking at measurement. First of all, there's one of validity. This is measuring what you intend to measure. So, for example, in a trading context, this might be if we are measuring ultimately results, then we can look at how various strategies are performing, how our strategies are performing in various markets, to actually hone down on measures which are valid. The second is the topic of today's conversation, really, and is all about reliability. Now, from a definition point of view, this is reproducibility of results. In simple terms, that if you do the same thing, will you get the same results again? The obvious aim is reliability of positive results. If you're not getting positive results on a regular, reliable basis, then this will necessitate some significant changes, not only in behavior perhaps, but also perhaps how your system is working. And in severe cases, it may merit you actually stopping trading altogether and taking a step back during some sort of review. So there are a few considerations. First of which is that you can't really have reliability of measurement unless you've got a critical mass of trades over a period of time. So, for example, if you only had 5 trades and were trying to determine the success or otherwise of your trading system, then that really wouldn't be as meaningful as if you had 50 trades or 100 trades. So the more critical mass of trades that you have, the more that you can make judgments about how reliable your system is. So what this means is that you should not only look at your account balance at set times, for example, monthly, quarterly, or annually, but also result trends. Are you seeing your results go up, or are you seeing them come down over a period of time? Developing some sort of consistency in the way you behave enables you to ride those times where results may not be the best that they can be and reduce the likelihood of confidence issues from recency bias. So, for example, if we have a run of 3, 4, or 5 trades which don't go our way in a row, then that should be seen in the context of how a system and yourself are performing in markets. If that's 3 or 4 trades out of 30 or 40, then it's hardly a dramatic alteration in reliability. The reality is, and anybody who's traded for any length of time will know this, is that that scenario is not uncommon. But what's key in this particular state is that we don't allow those 3 or 4 trades to dictate our success or otherwise as a trader and start to adjust our behavior because we're scared of losing again. Also, if your results aren't particularly good or are particularly good on a consistent basis, it may be the point at which we investigate changes in positioning. So if we have some degree of reliability, then that's the point at which we can start to consider scaling. So why is reliability important? Well, it gives us a few things. First of these is it gives you confidence in the system. There is no greater determinant of discipline and execution than to have confidence in your system. That's indisputable. If you don't really believe in your trading system that you're using in the market, then the chances of you following it are dramatically reduced. The second thing that is important in terms of reliability is having that emotional calmness. And having that calmness in the market facilitates better decision making. We all know that that is the case. If we're in a state of emotional upset, then our chances of making good decisions are dramatically reduced. The other thing it creates is it creates this justifiable, strong belief that we could do this for a lifetime. We all set out with a trading purpose and objectives around our trading. If we have the evidence from the reliability in results, then what this does is it creates a realistic expectancy rather than just a trading hope, which, to be honest, that's where most traders are. And of course, as I've already referenced, it allows you to exponentially grow through active scaling. But the issue is that most traders don't know if their results are reliable or not with any certainty at all, nor have a process through which to take these things to the next level if they produce evidence of some reliability. However, of course, there are threats to results reliability when these results may not be reproducible. And having stressed the importance of some of the things we've already talked about, arguably, driving for trading reliability could be perceived as your number one trading purpose. There are two types of reliability. First of all, the reliability of self. And this is all to do with internally your ability to be disciplined. We've already referenced how important confidence is in that. But there are other things too that may influence this. Recency bias is another one that we've already referenced. So this reliability of self, this ability to be consistent in how you follow your plan is critical. And secondly, of course, there's reliability of system. Now, you're probably watching this video at various points. Some of you will be fairly new to trading, others have been trading for some time. And what I suggest is that your level of experience dictates the sorts of things that you should start to look at. As a beginner level trader, looking at your overall results is really useful and the start point to getting into the great habit of measuring what you're doing and the outcome of it. At an intermediate level, you might move on to instrument or strategy specific measurement. By instrument, we mean it might be that you ring fence your Forex trades and see how good they're going versus your index trades. Or strategy specific may be something like looking at your breakout trades versus your reversal trades. In this case, we're really honing down onto what we are doing and how it's influencing our overall balance of our account. And thirdly, and once you move to an advanced level trader, we start to look at results within the context of a particular market type. We know there are times when markets can be choppy intraday, not seeming to have any consistency in movement, either up or down. We know other markets may be significantly trending in one direction or the other. The reality often is that our trading system performance will differ depending on these. And that's why we suggest that ultimately, as you move from beginner through intermediate to advanced, that this is something well worth looking at. But of course, the major threat to reliability is what's happening with you. And you must aim to correct this. The first and most common is that traders have an incomplete, non-specific, ambiguous, or non-evidence-based trading plan. Unless your trading plan ticks all of the boxes in terms of being comprehensive, specific and unambiguous, and over time is based on evidence of previous results, then you're not going to get to a stage where you're going to develop that belief in your system. Secondly, and fairly obviously, we've stressed right throughout this the importance of this being one of your key measures. And unless you measure performance and refine your systems accordingly, you're never going to get to that place where you're going to be sufficiently confident in your trading reliability to take things to the next level. It might be that you shortcut your learning. We've learned a couple of things that we've seen on YouTube, potential strategies that promise the world, promise riches in 5 minutes, and yet always invariably fail to deliver that. We haven't discovered the essence behind that particular system, when it works and when it doesn't work, and perhaps whether it's applicable to us at all in our style of trading. Make sure that you have a learning plan to take you to where you need to be into your underpinning knowledge. And then, of course, we've referenced this already, it's inadequate execution. You can have the best trading plan on the planet, and yet if you don't follow it, you might as well not have one. And unless you follow through on what you've planned, you can't begin to measure how successful or otherwise your system is. The only time this is possible is if you follow that system to the letter. So we've outlined the key things that can go wrong, most of which are in your control. And if there is any gaps in your game, then you must look to correct them. It's really that simple. So go forward from here. Review your existing practice in the light of the information covered in this video. Ask yourself, is there any way I can refine what I'm doing now to achieve results reliability, or at least move towards that step by step? We hope that's been useful. We'll see you again very soon. Trade safe and see you again soon. Bye bye for now.